Michael Burry, How to Invest for Beginners in 2022. Welcome back to Wealth-ology. For today's video, we will be going to talk about how to invest for beginners in 2022 by Michael Burry. Let's get started. Right, we bought basically short 8.4 billion of credit default swaps related to mortgages or financial companies, and I was extremely confident in the outcome. We're your investors as confident. I know for sure that some of them thought I lost my mind. It's remarkable. There are investors who made tens of millions off this and were still pretty upset. Michael Burry was the one who predicted the housing bubble in the United States in the early 2000s, the man who made over $800 million by investing in credit default swaps, the man who was portrayed by Christian Bale in the film adaptation of Michael Lewis's novel The Big Short. Michael Burry reveals at the end of the film that he doesn't really invest anymore, and he only concentrates on one commodity: water. Burry is a truly back in stock market, and he even reopened his fund with Skyen Asset Management, which was born from the ashes of Skyen Capital. So that the line in the movie didn't age well. Now, if you don't follow the stock market very closely, you might not realize that we never see interviews with Michael Burry, and that he also doesn't do any kind of podcast, Q&As, and anything like that. During the years 2020 and 2021, many of us were still able to keep up with his stock market thoughts and opinions through his Twitter page. On his genuine Twitter account, he goes by the name Cassandra. Even if we don't have the usual excellent interview clips and lecture snippets to show you, what I wanted to do in this video was to try to decipher Burry's recent thoughts on investing, inflation, and the state of the markets. What's his advice? What his message would be going in 2022. So, first and foremost, what would Michael Burry's counsel be right now in terms of the stock market? Burry, like many other super smart investors I follow, believes that the US stock market is extremely hot right now. He sees big overvaluation and he isn't afraid to call it out either. November last year, he said, more speculation than the 1920s, more overvaluation than the 1990s, more geopolitical and economic strife than the 1970s. So, no ifs or buts there. And even looking at a pretty basic measure like the Shiller PE, we can see that this Shiller is kind of like a big PE ratio for the whole market. So the higher the number, the more investors are currently paying for the SP 500's earnings. And right now, investors are paying 36 times the average inflation adjusted earnings, the SP 500 to own it. Crazy, considering that the advantage Shiller is about 1,617, and that's even considering the fact that SP 500's earnings went up substantially last year. He's so confident on that prediction. He said back in June, quote, "People are always asking me what is going on in the markets. It is simple. Greatest speculative bubble of all time in all things, by 2 orders of magnitude." And he's held this belief for a long time, as evidenced by an email interview he gave in 2019. He explains why ETFs are beneficial. We were in bubble territory and his theory seemed reasonable. Low interest rates means more money is flowing into the stock market, and index fund investment is becoming more popular. Money is pouring into America's top 500 corporations. People are simply investing in the index, not on the merits of individual business. Because the price is rising, that's how bubbles appear. When the inflation of the underlying business's stock prices is no longer based on fundamentals. However, during the same interview, he also said that he was still able to find value, but it was in international markets, for example. He said, quote, "It's not that hard in Japan to find simple extreme undervaluation common law earnings multiple, or a low fee cash flow multiple. In many cases, the company might have significant cash or stock holdings that make up a lot of stock price, unquote. He's not really a doom and gloom kind of guy. In fact, he admits that there is still value to be had, but it's elsewhere. But definitely, for those investing in the US, Burry thinks things are getting very hairy for everyone, just across the board, passive investors and active investors alike. If you want deals, it's probably best to look elsewhere right now. That, we believe, is his finest investment advice for 2022. To be honest, Burry's tweets are right up there with Charlie Munger's lectures, Q&A sessions, and Ray Dalio's interviews. They've all had the same theme: discovering better investment prospects outside of the United States. So, if you can grasp the company you're examining, looking globally might not be such a bad idea. That, we believe, in Burry's interview on the current status of the market, another major issue will be resolved in 2022. Burry also has something to say about it. Michael Burry is a big believer we are going to get crunched in inflation in the next 12 months, or so he actually called it back in February 2021. He said to prepare for inflation, reopening, and stimulus on the way. That was happening, he said. The US government is inviting inflation with trillions of dollars of money, printing plus reopening boosting demands as employees and supply chains costs skyrocket. And for context, this was the annual inflation rate in the US back in February 2021, when he made this call 1.7%, and this is what followed a progressive rise in the annual inflation rate, all the way up to now 7%. I mean, what can I say? He definitely nailed that one, didn't? He tweeted in November, quote, "Inflation. It's not just reopening anymore, folks. Not that anyone could have seen this coming," unquote. There from Burry. But all through last year, he was talking about inflation, and honestly, he was betting on it. Last year, he actually bet against the 20-year US Treasury bonds now. The reasoning here is that when inflation rises, the Federal Reserve should step in and raise interest rates to pull it back down. And then, when interest rates rise, bond prices fall. Burry decided to bet that the iShares 20-year Treasury bond ETF, whatever it was, would fall. And he was correct in his assertion. However, the Fed chose not to act sooner. He most likely lost money on the deal now. However, he has since abandoned his bond bets. That bet, as well as his previous tweets, clearly demonstrate this. He believes inflation will persist and, more crucially, that interest rates will climb. So, what do we take away from this? We don't think we need to do anything with any of it. We don't need to mimic transactions or purchase puts against the iShare bonds ETF. We merely need to be mindful of Warren Buffett's position in 2022. If inflation continues to buy it, we may see some fairly high interest rate hikes in the coming year. We simply need to psychologically prepare for an increase in interest rates. Make sure you're not going to have any personal problems as a result of loan interest payments. You've suddenly become more pricey, or you're concerned about bond prices. The stock market may fall or come under a lot of strain. That's what we can deduct from Burry's present inflation thesis, and they're the three major factors that will affect investors in 2022. Number 1, overvalued markets. Inflation and interest rates. That, despite someone like Warren Buffett and Michael Burry being really quite different investors, when we take the time to analyze their thoughts and what they've been saying coming in 2022, we kind of get to the same conclusion on a lot of these points. And the reason for that is that these two investors have one key thing in common, and it's that they're very rational in their approach. Over time, they've mastered the investing temperament needed to do very well in the market. Burry's starts on a couple more financial topics that are less significant now, but will undoubtedly continue to make headlines in 2022. First and foremost, in terms of cryptocurrencies. Last year, Burry was clearly pessimistic on cryptocurrency. He has consistently stated that Bitcoin is essentially a gigantic speculative bubble, as well as warning that the crypto markets may be propped up on a lot of borrowed money, which would clearly not end well. When the interest payments on that borrowed money begin to rise, the level of leverage applied to a certain coin or asset, Burry, on the other hand, believes that cryptocurrency is a gigantic bubble ready to burst, propelled by leverage. Burry has been discussing the meme stocks, as well as GameStop's AMCs, and if you don't know, Burry actually owned GameStop in 2020, but unfortunately, for him, he sold his entire position by the 31st of December 2020, just few weeks before the short squeeze at the end of January 2021. But for a little while now, he's actually been warning you, know the people that are still holding the bag, that this situation will likely end in disaster. It was actually in July last year that he did an email interview where he said, quote, "I don't know when meme stocks such as this will crash, such as GameStop, but we probably don't have to wait too long, as I believe the retail crowd is fully invested in this theme, and Wall Street has jumped on the coattails." But Burry told Barron's via email, "We're running out of new money available to jump on the bandwagon. A lot of people are saying, you don't need new people to jump on the bandwagon. We just need to short to cover, and that will spike the share price." But the truth is, Burry was definitely right here. The bandwagon just isn't there anymore. And we're already seeing, even other the past few weeks, people are losing interest and abandoning ship, which is just by itself driving the share price down. And now GameStop is now down over 50% from its November high. AMC is down 71% from its short squeeze high. Michael Burry, on his gloomy prediction for meme stocks, will probably age pretty well in 2022. So which investment tips of Michael Burry have you found to be particularly beneficial? Please let me know in the comment section below, and if you like this video, please give it a thumbs up. Turn on the notification bell and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.